Hey folks, Dan Frio, the Mortgage Update. Today is June 23rd, 2020. I got a new watch, a birthday present, and I want to thank everybody. I got so many happy birthdays yesterday. It was really cool. So what I want to do today is we're upgrading things. I'm going to show you an upgraded website. I got some things going on in my office here. My son made me a big plaque yesterday for my birthday. I'm going to put it on the wall. We're getting decals, we're getting lighting, we're getting painting, we're getting a whole bunch of upgrades here. So thanks to you guys for supporting me. And I need you to please don't forget to give me a thumbs up, subscribe, and do all that other stuff. So today we're going to talk about housing sales. They're booming. And as states come out of the pandemic mode and they open back up, things are getting crazy. And housing, you're going to see a huge or a very strong housing market in purchases. And then we're going to go over how much you really need to have for a down payment. And I'm going to go through all the options for your down payments if you're looking to buy a house. So first of all, you come to the channel so we can go over rates. What happened today with mortgage rates. So let's get to it. We're going to get there right now. So in the markets right now, we had Sandy. He's a Moody's analyst coming out with very, very strong housing market. And the catalyst to that is, was employment, but home sales, and then just rents are going crazy. So with the historic low rates, housing actually appreciating. Even with this pandemic going on, the housing market's been very strong. So you have that, and then when we come out of pandemic mode, we see a huge second half of the year, and it's all propelled by this. What's going on with mortgage rates? So anybody new to the channel, my name is Dan Frio. I do the mortgage update every day, or try to do it every day. I'm a mortgage advisor, have been for 32 years now. And I watch the markets for you guys. I'm licensed right now in 44 different states, and we have an online application system, and I'm going to go over that with you here shortly because I got a brand new website, and I hope you like it. It's basically, you just go click through some questions. It'll take you 5 minutes. Then once you're done, it'll say, okay, to get you pre-approved or get you going forward, just drag and drop a couple of different things that we need based on the questions that you answered into the system, and it'll get you into there. And within an hour, we will get back with you, hopefully with some great news. But good news for the day. Mortgage rates eased a little bit more. We got a couple ticks down. Not really enough to really change the markets. What this number is here, it's the mortgage-backed securities, a price of a bond, and it's called the mortgage-backed securities. It's a bond that loops together or lumps in a whole bunch of mortgages and it is sold off as an investment, okay? How this works is as this number goes up, people are paying more for that bond, and thus, if you pay more for a bond, it reduces the rate of return that you get on that bond. Ultimately, in this realm, it reduces the mortgage rate. So 5 is, I'd rather have 5 up than 5 down, but really not enough to really change the markets at all. And right now, like I said, we're going to go back to this. We're staying steady. Some of the historic or average numbers are through here. They're really not hitting any technical levels right now that are going to change anything. The Federal Reserve is still coming in on a daily basis, buying a ton of bonds and keeping a kind of a lid on all this and keeping the stability in this market, because the housing market is basically the catalyst to the whole country. And because of what goes into housing, there's employment with that. A ton of people get jobs with that. The raw materials and all the other stuff that go into homes makes that the biggest industry basically in the economy that drives everything. So today we saw the stock market was up 131. Awesome. Again, we had a good market for the Dow Jones, and we also had a good market for bonds. So that's good. Then you go through all the housing numbers, and I'm going to condense this for you. Housing appreciation is going up. Look at this. We saw home prices up 4.9%. That's a nice move. And then all the other information here tells you basically that there's pent up demand for people buying. And then once the pandemic's opens up in a lot of these areas, we're going to see even more houses go on the market right now. But the inventory is starting to decrease. So that's kind of, I'm not saying that's a worry, but that's a piece of the puzzle. But I think this number is going to increase. We're going to see more and more people once they get back to work and back to stability or normal lives. Being cooped up in their home for 2-3 months, they're probably going to realize, you know what, I need something bigger. I need something of my own. I need this. And that's why I think with all this stuff, we're seeing great demand for people buying homes. So that's what we're going to focus on today. The economic calendar for the day was really irrelevant. New home sales, they were up pretty nice. I mean, they were up almost 100,000 right here versus where we were last month. The Federal Reserve Manufacturing Index, I don't think that's posted yet. No, it hasn't been posted yet. I'm not sure how that number came back. And the 2-year auction, that's kind of irrelevant. But the rest of the week is, we're looking at durable goods, jobless claims, and a bunch of other things. I don't see any surprises going on here that really should affect the markets. Again, the Fed is really taking head lead on all of this stuff, trying to stabilize the markets, and I'm saying they're doing a fantastic job. A lot of the headlines throughout everything is basically April home sales surge, rising over 16%. What do these people know that maybe you don't know? Like I said, I look at it as historic low rates. A lot of people got stuck in their homes for months and realized, maybe I don't want to do this. Rents are going up at a dramatic level in a lot of areas. So people are finally saying, and hopefully some of the education's getting out there that we're going to go over here in a second. You don't need as much of a down payment as you think. And that was my caption yesterday. There was a lot of things that I looked at said, you need more money than you think when you're buying a house. Well, maybe. And I walked you through ideas on how I can help you with our team, with realtors and attorneys that we have to drive down that bottom line for you. So go back to yesterday's video, June 22nd, to find out, how some of the tricks of the trade that we have internally on how to drive down the amount of money you need for your down payment. Some of the headlines on CNBC today also was there's a housing boom. Why? Record low interest rates. And we won't go through there. That's forbearance. So that's for people that already own a house. Okay. So we see, all the things, and this is today. I just went to CNBC. Again, it is June 23rd, 4:30 Central Standard Time. This is the headlines everywhere. Housing sales, housing sales, housing sales. So people are starting to realize, home ownership is the way to go. So let's go through some areas on, how much do you really need when you're looking to buy a house? So let's get to it. I just kind of briefly put this together. And this is where a lot of people don't really realize, and I don't know where a lot of the data comes from where, you need 20% down or 25% down. I've been in this business for 30 years. And even when I started, you didn't really need 20% down. But let's go through some of these just briefly on how much you really need down when you're buying a house. So those in the USDA areas, if you don't know if you're in a rural area and you're looking to buy a house, let me know. I'll help walk you through. There's two main criterias for USDA. We have to look up that property to see if it's eligible. And then there's also income eligibility. You can't make way too much money because you'll fall out of this program. So I can walk you through those two big pieces of the puzzle if you're looking in an area where you think might be USDA eligible. So that's 0% down. The next thing is, and there was no particular order in this, so I apologize. FHA, you need 3.5% down. Let me explain what I mean by down. Down means your kind of skin in the game is the best way to put it. So make it simple. You're buying a $100,000 home and you need zero down, means you need no down payment money. So zero. On FHA, it says 3.5% down. So you take 3.5 times the purchase price of that home, which is $100,000. So 3.5 times that is $3,500. So you can get into a FHA. You can get into that home with an FHA program with 3.5% or $3,500 down. There's other costs involved, but I can help walk you through those to kind of drive those down. But that's what you need in that program. There's two particular first-time homebuyer programs, and you'd be amazed that you really don't have to, this doesn't have to be your first home ever. There's a different criteria for each one of these programs, but there are multiple programs with 3% down. So in that case, it would be $3,000. If you're a veteran, this is the way to go. No money down. If you're a disabled veteran, God bless you and thank you for doing what you did. You have basically no fees, and I will waive our lender fees for you. And I'll also help you in many areas, in many states. You do not also have to pay real estate taxes if you're over 70% disabled, and I will help you there as well. And then a lot of these other things are basically boutique programs and so forth. So those are basically the 5 major programs on how to qualify or how much money you really need when you're looking for a down payment. So the best way, if you'd like for me to help you out, we go to my website. I just launched this brand new version this afternoon. I got to work on my logo. The logo should be going across here, and I can't get it captioned right. So, but if you'd like to talk to me personally, just go to, or to find all this stuff, go to therateupdate.com. That's what we're called. You can call me personally at 844-775-5626. If I don't answer, don't fret. Please talk to one of my guys or girls here. And after they get your information, they bring it to me. We go over it, and I'll get back with you with an email or a phone call or whatever, just to make sure you're comfortable, go through all of your options with you, and help walk you through the whole process. Ways to do this. If you really want to get the ball rolling right now, just hit the Apply Now button, and it's going to walk you through. It's super simple. It's going to walk you through multiple questions, and they're very easy questions. At the end, based on your answers, it's going to say, we need a couple items from you to get you pre-approved. There is a difference between pre-approval and pre-qualified, but we'd love to get you pre-approved. And you just drag and drop that data in there, and then all this, as soon as you click finish, all of this data comes to me, and we'll get working on this immediately, plus reach out to you. So that's the best way to do that. If you just want a quick quote, and I'll give you a phone call and saying, okay, let's pick your brain, and let's see what exactly you're looking to do, and let me walk you through and answer all your questions. Just do a quick quote right here. I got multiple loan officers on my team, so if you want to reach out to them personally, if you talked to them in the past, or you've dealt with them, or you got any marketing materials from them, reach out to them. You can just click, let's say you want to get a hold of Alex, there's her phone number, and then it goes to her website, and then you can apply right there on her landing page. So that's basically the way to do that. But if you haven't worked with anybody, you're more than welcome to pick me here. Or if you just hit apply now, it's going to go to me anyways. So that's the best way to do all this stuff. However, if you'd like to email me something, and there's 2 things I want to ask of you if I can. My email is dfrio, which is Frio. So that's dfrio @preferredrate.com. So what I'm going to ask you to do is, if you're in the process of buying a house right now and you're working with a lender, but you're like, you know what, is this the best terms for me? Please don't be wowed over the rate. Basically, what I'm going to ask you to do is send me a copy of what's called your loan estimate or your fee sheets. I'm going to look at the rate, but I'm really going to pay attention to those costs that they're charging you. On average, I'm probably saving clients $2,000 on their closing costs. And most of the time, we're about 0.1 to 0.2 lower in rates. So just think, if I can get you a rate that maybe is a quarter lower and we're saving you $2,000, not a bad gig for just finding me on YouTube. So if you have not yet, if you own a house and you're like, you know what, I really would like to see what I can do, just email me a copy of your mortgage statement, most recent mortgage statement, and what you think your credit score is. And within an hour, I'll get back with you and say, no, here's what we're probably looking at in regards to rate. If that works for you, then you can call me or I'll call you, and we'll get all the details to get you moving forward. So that's the best way to do this. So again, I hope you like what you see. If you do, please don't forget to give me a thumbs up. I'd truly appreciate it. Subscribe down at the bottom. And just smack that subscribe button. Help and share the video if you would. I'm trying my best to get 10,000 subscribers this month. Just so the more subscribers we have, the more people we can help. And that's what we're here for. So God bless. Hope to hear from you. Leave some comments down below. I'll see you tomorrow. same time, same place. See you then. Bye-bye.